what we're going to be going over here is direct variable costing. I'm using these terms interchangeably. Some may call it direct costing, others may refer to it as variable costing. Okay, so looking at our variable costing here, it's one of the inventory valuation methods we use here in cost accounting here to value our inventory here. So I've got it showing here where we've got these 4 different inventory valuation methods here. And started with the top amount here would be the least amount where your inventory cost, the least amount that you would have included for your inventory cost would be based on throughput costing. And then the most of your inventory cost or the accumulated amount here in your inventory would be based on activity-based costing. So direct variable costing here is the second on our list here for the least amount of inventory cost. Okay, so what are we talking about here with inventory? This is what were the items that would be included or capitalized in your inventory, the different costs here, versus what is expensed. And we're going to be expensed when they're incurred. So for direct variable costing, your direct material, your direct labor, and your factory overhead, the variable portion gets included into your inventory costs here. Those are the amounts that are going to be capitalized, those 3 amounts here. Now, this is the case here for the factory overhead, the fixed portion. Any selling and administrative expenses here, both the variable and fixed portion, those are going to be all expensed when they're incurred here. So when I'm talking about selling and administrative expenses, I'm lumping all those fixed overhead costs or fixed and variable overhead costs for engineering, research, development, and so forth, all into selling and administrative expenses. So when you're talking about direct or variable costing here, just remember here, this factory overhead, that is the only variable portion here of the overhead that gets included in the inventory here. So inventory, direct or variable costing, direct materials, direct labor, and factory overhead, the variable portion gets included in your inventory here, costed in your inventory. All the other amounts here get expensed when they're incurred. Okay. So let's go over here and let's look at our cost flow here for variable costing here. And we're going to be going through our cost flow here, and I'm going to relate this cost flow here down to our income statement. So our income statement here, so we're going to understand our income statement, how we calculate and determine our operating income, or based on our cost flow here for our variable costing here. So what you're going to have here, you're going to have I'm going to have your assets here. You're going to have your different costs that go into your work in process here. Work in process flows into finished goods here, those inventory amounts, and then they're going to be flowing into the cost of goods sold, expense for those cost of goods sold for the sales here for the period. And then all those other costs that we talked about, those are going to be included here, and they're going to be expensed in the period here. They're not going to be included in the inventory or the cost of goods sold. They're going to be expensed. Okay, so let's just go through our cost flow here. So for our variable factor costs, it would be the direct materials, direct labor, and your variable factory overhead here. Those would be the total variable, be accumulated into your total variable manufacturing costs, and they would flow into your work in process inventory account. So you take your beginning work in process, add to it those total variable manufacturing costs you had for the period, and then you'd have to subtract out your ending work in process. That's going to give you your variable cost of goods manufactured. So then they would flow into your finished goods. You take your beginning finished goods, add to it the variable cost of goods manufactured here, subtract out your ending finished goods here. So that's going to give you your variable cost of goods sold here. So that was what's going to be included here and expensed here against your sales based on this cost flow here for variable costing. All those other are fixed factory here, overhead here, plus the selling and administrative expenses. All those selling and administrative expenses plus the fixed factory overhead here are going to be expensed for the period here. They're not going to be included in the cost of goods sold. So you see here why we might want to call it variable costing here. So everything was, we just had all the variable costs. And when we mean variable costs, they include direct materials, direct labor, and the variable factory overhead. Those just flow into our inventory accounts here and into our cost of goods sold. Okay, so for our income statement, and we're going to look at this income statement, and you can relate it to our cost of goods flow that we just looked at, our cost flow for the direct or variable costing here. So we would start out with it's really 7 steps here. Started out with the direct material that we've used. We just take our beginning materials we have on hand, add to it any purchase materials here, direct materials here, and then we would subtract out any ending materials we have on hand. That's going to give us our direct materials that we've used here. So then our manufacturing costs was going to be the direct materials that we've used here, and then we add to it the direct labor and the variable factory overhead. That's going to give us our total variable manufacturing costs. So we take those total variable manufacturing costs and we can calculate our cost of goods manufactured. So total variable manufacturing cost plus the beginning work in process minus your ending work in process gives you your variable cost of goods manufactured. So your cost of goods sold is just taking those variable cost of goods manufactured, add to it your beginning finished goods, subtract out your ending finished goods, and that's going to give you your variable cost of goods sold here. Now, this is where it comes into the manufacturing margin here because we're dealing with those variable costs. So your manufacturing margin here, that's going to be the sales that you have for the period here, dollar sales you have for the period. Then you subtract from it your variable cost of goods sold that you have. That's going to give you your manufacturing margin here. So now this is where we have our contribution margin in this case here. So you take your manufacturing margin, and this is the case here where you subtract your variable sales and administrative expenses here. That's the key here. You subtract just the variable sales and administrative expenses from your manufacturing margin. That's going to give you your contribution margin here. And then your operating income here is just taking that contribution margin, and now we have to subtract out the fixed factory overhead here from it and the fixed sales and administrative expenses from the contribution margin. That gives us our operating income here. So you see this contribution margin or that we have here, that includes all the variable manufacturing costs and non-manufacturing costs here. We have to subtract out those non-manufacturing variable costs here from our manufacturing margin. Okay, so again, that includes all the variable costs, manufacturing and non-manufacturing. And then the operating income we have here, that this is where we deduct all the fixed costs, both manufacturing and non-manufacturing. So really that's the key here. The contribution margin, that included all those variable costs, manufacturing and non-manufacturing, whereas our operating income here, this is where we had to deduct the fixed costs, both manufacturing and non-manufacturing. Okay, so that's pretty much it for cost flow here for variable costing. And we looked at this income statement here, and that was based on that cost flow that we looked at here. All right, so that'll summarize our topic here on variable costing or direct costing, whatever. They're interchangeable terms. I like the term here, variable costing, because it's got all that, everything is based on the variable cost up until you get to your contribution margin and your operating income. Okay, so that'll summarize our topic.